This morning on BRN, a commercial real estate recovery in 2025. Joining me now is Deidre Woolard, a senior journalist focusing on the real estate industry. Deidre, always great to see you. Happy New Year. Thanks for joining us on the program this morning.
Doing great. Still studying the real estate market. Excited to talk
Yeah,
about it with you.
I'm really excited, your knowledge of this market, both commercial and all the subsectors of the sectors, and also the knowledge of the residential market, unmatched in my opinion. So let's talk about 2024 first. I want to set this up for our audience. I think the last time I had spoken with you, we had you in the program. People were still working remotely, some challenges in the office markets, but maybe some other areas like retail, data centers were doing well. How did we do in 2024, excuse me?
Good, but not great is how I would describe it. So looking at the performance of real estate investment trusts, REITs, historically over the long haul, they outperformed the broader market. Not true in 2024. They were up 8.8%. Good, pretty good. But the S&P 500 was up 25%. NASDAQ was nearly 30%. So, REITs are still not performing where we wanted them to be. And so much of that has hinged on office, like you just said, and also interest rates in general. And interest rates, there was a little bit of hope at the end of 2024.
Yeah.
That hope is not quite playing out. I'm not sure how low interest rates are going to get. The Fed is probably going to cut twice. That's the current prediction, but we may not see a big drop in interest rates like we were hoping for.
That's a bummer. I think it's a bummer for the market. It's also a bummer for people borrowing money or building big capital expenditures like what we're talking about with real estate. All right, Deidre, let's talk about 2025, and it's early January or late January that we're talking, and probably by the time this airs, are things off to a better start in terms of commercial real estate?
They're off to an interesting start. You mentioned data centers before, and well, they just got a big boost. We're at the start of this new presidency, we have this massive $500 billion investment in data centers. So that's the Stargate project. It's got investments from SoftBank, OpenAI, Oracle. And, I live in Northern Virginia. Data centers are huge here. We're sort of the biggest center, but Stargate's starting in Texas, in Abilene, Texas. Already got buildings being built. Data centers, it's tricky because there are those concerns about power. It's already a big strain here in Virginia. It's going to be a strain elsewhere. There's also data centers require a lot of water for cooling. So there are some drawbacks, but overall, that area of the market is just booming out of control.
Yeah, I did see, I saw that press conference, at least outside the White House, and I immediately thought of, when they started talking about data centers, Deidre, I thought of you. I guess that's going to be interesting to watch. And I know that as you said, there's a big draw on energy. It'll be interesting to see if we have enough energy to do all the things that these computers are going to need to do. Deidre, when you look at retail, I want to get to residential in a minute, but when you look at retail, malls, town centers, things like that, how are they doing?
It's interesting because it's sort of a tale of two worlds. I would say I'm less optimistic about retail than I was last year.
Hmm.
Still a high absorption rate, low supply in a lot of areas. We're not building a lot of retail real estate. Neighborhood strip malls, especially those that are grocery anchored, they're still performing really well. But then you've got this weakness in retail chains. You've got Macy's reducing stores. You've got the drugstores and dollar store chains thinking about reducing in certain areas. We're going to see more store closures this year, high profile retail bankruptcies, like we just saw with Big Lots, Joann Fabrics, Party City. There's something happening in retail, and we have to watch the tariffs. Depending on how the tariffs fall, that could really impact retail.
Yeah, hopefully we don't have tariffs and everything works out. That would probably be the best of all worlds, but you're right, we'll have to watch that. Before we get to residential, I'm sorry, but I want to ask you about commercial and in particular office. There have been, are people returning to the office, and therefore, and that's a generic question because it's probably different in different regions of the U.S., but is that an opportunity? Are offices still being leased? And could this, and I think there was an executive order asking federal workers to return. Could that kind of follow through and domino into the private sector with the big banks and other institutions bringing their workforce back from working from home?
Well, certainly everybody's been trying, and you and I have been talking about this for a couple of years and
Years
thinking it was
since
going
the
to happen.
pandemic.
Yeah, absolutely. It hasn't happened yet, but like you said, there are mandates. Amazon, JP Morgan Chase, there is this push, and this time the push may happen in a way that it hasn't really before. Hybrid is absolutely still a thing. Work from home research, they put out these numbers, I think every quarter. Around 28% of paid work days were work from home days last time they ran the survey. I think that is going to go down. We're going to see less. That hybrid thing is going to get smaller and smaller. It's been, people are in the office Tuesday, Wednesday, Thursday, and still have Mondays and Fridays at home. I think that's going to shift a bit. And, where it's interesting is where it's happening, where it really needs to happen is Silicon Valley. San Francisco and Silicon Valley really hit during the crisis. And got data from reported by Globe Street that office leasing in the last quarter in Silicon Valley was above 2.4 million square feet. First time it's been over 2 million square feet since 2019. So perhaps some signs of life there, which is good to see.
Who's got the leverage? So during the pandemic, obviously the workers had the leverage, and they could say, "I'm not going to come back. I don't want to work remotely." It seems like that pendulum has really swung. I know Jamie Dimon, other key people, influencers have said they want to bring their workforce back, but they were always at the behest of the worker. It seems like that has really pivoted to the other way.
Yeah, I mean, unemployment is still really low, but there's a bit of fear. It's just a little bit different than it was the last couple of times we've seen this. I think workers feel like they have less bargaining power. So
Mm.
we'll see what happens there. One of the things that's interesting too is we may see the return of co-working. CBRE recently bought Industrious, which was a WeWork competitor. WeWork is sort of, it's still out there, but going through its own problems. But we
Yeah.
may see more smaller offices, and co-working could be back.
That would be fun, I guess, if you like this, if you like your co-working neighbor and they're clean and they like my desk was always very bare. My mother jokes about this. My desk when I worked at T-Bird Place was very bare, had nothing on it. So I guess if you have a partner, a co-working partner to share that space, that would be good. Deidre, let's take a spin around residential housing market. Let's talk about generalities there. Are there certain areas of the country that are doing better than others? What can we expect when you look across the United States?
Yeah, there's well, especially when we look at residential, we look at both individual houses and multifamily. The Florida markets, South Florida, the amount of inventory has gone way, way up.
Mm-hmm.
And that's due to a bunch of different factors, including the cost of home insurance. So interest rates haven't gone to that place where people are rushing to get into the market. Supply is growing mostly because things are staying on the market longer and not because we're getting a rush of new supply of existing homes. And over the last couple of years, new homes have taken up a larger portion of the sales. And I think we're going to continue to see that because we're just not seeing a bunch of people rushing to the market because they don't need to. They have a great rate and they're not going to move and get a higher rate.
So, it seems like, and you're the expert here, I'm certainly not, but I read enough that mortgage rates are really stuck around 7. I mean, and they have been even with the rate cuts. So if we get rate cuts, what will we see mortgage rates come down in 25? Or as you say, it's just going to be a slow game to kind of see them roll down over time. I mean, still historically pretty low rates compared to when I was a kid in the 70s and 80s.
Absolutely, yes. Well, historically, it's around 6 or 7%, and that's where we are now. But that's historical, and that's not recent memory. Recent memory for people is sub 5 and as low as 2 and 3. So, really, 6 might be an inflection point that will
Mm.
drive people to sell and drive more motion in the market. 5 would be a huge rate mover. We're not going to get to 5 this year, in my opinion, unless something dramatic happens. But even getting closer to 6 will move the market a lot.
Last question for you, Deidre. What about new home buyers? I mean, am I going to be living in my wife and I be living in my parents' house? I'm not doing that now, but in order to afford to buy and save for a new home, I'm going to have to do something. That's tongue in cheek. I don't live with my parents, but I'd love to. But seriousness, in all seriousness, what about new home buyers? Are they going to have an opportunity this year, even with rates kind of stuck at 6 to 7%?
Well, not to bring up tariffs again, but that could be an issue. If there are tariffs against Canada, that affects our lumber prices, which will affect the price of homes. Some of the new home builders have already reported in this investment cycle, and it's been good news so far. They're seeing strong demand, but they're in this spot where they're trying to trim margins a little bit because they have to keep prices low and costs may go up. So there are some concerns there, but their goal is always to keep it within the realm of what people can actually afford. And new homes have the advantage because they can do a mortgage buy down, so they can give you a lower rate, which is something you can't really do with an existing home.
Yeah, really interesting. Deidre, it's always a pleasure to see you. I mean, like I said, your knowledge in the real estate market unmatched. Great to see you. And look, we look forward to having you back on the program again very soon.
Thanks. Great to see you.
And don't forget to subscribe to our daily newsletter, The Morning Post, for all the news in one place. Details, of course, at our website. And we're back again tomorrow for another edition of BRN. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.